Hey guys, thank you for coming to another video. Today's a green day. It's a really small green day, but at least it is a green day. It was a tough one. I decided to trade a stock that wasn't within my criteria. I'm always looking for 5 characteristics: the price, the float, volume, relative volume, and the percentage of change. The reason I decided to trade this stock was because it was the only one that was moving. It was the only one that was giving opportunities, that was giving setups, and I felt like it wasn't going to be as bad. So that's why I decided to trade it. And as you can see right here in the morning, I'm seeing it right here at 9:22. I'm looking at the scanners, and I'm gonna show you right now. I'm looking at the scanners right here, and as you can see, out of the 10-liter gappers, just a few I was looking at. QUCY, the price was too cheap. The float is great. I'm always looking for stocks that the float is less than 20 million shares. Compared to the volume, which is really big, it was great. Float is great, volume is great, the gap percentage of gappers is great, and price wasn't great. It was too cheap. I don't like it. The reason I don't like this price range is because it takes too much to be able to move 5 cents. I'm not looking for that. I'm looking for immediate resolution, like a stock that moves 10 cents like that quick, because that is my goal. My goal is to just get one stock each day out of the market that is going to give me the opportunity to profit 10-20 cents out of the movement, but it has to be quick. So yeah, FCHL, the same situation, price too cheap. AEHL, the price is not that bad. The float is great, volume is great, percentage of change is great. So this one wasn't looking as bad. NBIG, price is too expensive. NBIL, price is too expensive. EOSE, price is great. Float is so big, no, it's not great. TDIC, price is good. Percentage of change is good. Float is not as bad. It's not what we like, but at least it's close to within the range. And the volume compared to the float is less. So for that reason, no, I didn't put it in my platform. OCG, price is good. Float is great. Volume is great. WOLF, price is too expensive. VNET, this one right here, this one is the one that I was talking about. VNET, price was good. The percentage of change is good. Float is really big. It's 108 million shares available to trade. The volume compared to the float is so small, 4 million shares. But it was moving. It was giving opportunities. It was giving setups, and that's what we want. All right, so I already have it right there. As you can see, it was 9:23 a.m. in the morning. I was waiting for the stock market to open, and as you can see at the charts, this white line, this is the pre-market, and the aftermarket, when the stock market opens, is what is on the other side of this white line. This stock recently started to move around 8:40, 8:45. It was already moving. Before that, it wasn't. All right, so it's 9:29 right there. 9:30, the stock market officially opened, and the stock starting to move. I was a little bit hesitate, and for that reason, I was late. I was late for the break of the exponential moving averages, the 9 and the 20, and the break of the previous high of the previous candle. I was late, and my entry was late. 11:25, I was late for it. One thing that I decided to do before I started trading this stock is that I changed my quantity. Instead of buying, my buying power was going to allow me to purchase at least 600 of VNET stocks. However, I decided to just to edit my hotkey and put 150 as the quantity that I wanted to purchase, as a way to minimize risk. And I just decided to sell right there to get out of my position for to look for my next opportunity. Right there, as you can see, quickly it went from 17 cents all the way down to 9 cents. That was a quick movement, and that's why and that is the reason I decided to purchase. That's what I was looking for. I initiated with a purchase of 150. Remember, my buying power allowed me to purchase 600 stocks, but I decided to just use my other hotkey and I decided to purchase 150 as a safeguard. But it was working. It was the support level right there. There is a support, and it went up. It went up right there. I'm on the green. I let it work. One thing that you guys should also know is that I always sell on the bid. I sell to the buyers and I buy from the sellers, right? The reason I do that is because my orders execute right away. That is why I purchase from the sellers and I sell to the buyers. So when I purchase from a seller and when I'm looking to sell, I don't put my order on the ask and wait to get filled. I always sell to the buyers. So I'm looking at the bid. If I decide to sell to this buyer at 11.22 cents, right there I'm already 12 cents profit. So 150 times 12 cents was equivalent to $12, right? So, but I felt like it was going to move up a little bit more, and I was waiting for it. I sold half. I was waiting for this price to reach the highs, which is around 11.50. It went up a little bit more. Right there, I'm up 24 cents. 24 cents. That's a lot. That's a lot. And I sold the rest. And right there, I'm green at $1.21. And it reaches the 11.50. It reaches the 11.50, but it's fine. I let it work. I don't fall victim to FOMO. I don't purchase right here because I want to make more money. No, because the reason I don't like purchasing of these levels is because I'm just not good at it. When I always purchase on the highs, I'm waiting for another retracement movement. I'm basically looking for a pullback. And right there is another resistance level which is breaking. $11.62. It broke that resistance level, and I'm just waiting for it to go down and to purchase and to do a bounce off the 11.50. That was my plan, to do a bounce of 11.50, because now the half dollar is gonna work as a support. I'm looking at level 2. I'm not looking at the charts. I'm looking at level 2. I'm looking at the ask price, to be specific. I'm looking for the sell off. That's what I'm looking for the sell off. When it sells off really quick, that's when I purchase right away. I don't feel like it's selling off that quickly. I don't see it. I don't see the unexpected move just yet. That's why I didn't purchase. That's why I didn't buy. And let's see. You when you do bounce off whatever price, you always gotta like go for the unthinkable. You see, 11.32, 11.31. That was for me the unthinkable movement. the sell off, and I feel like I really had a really good entry. And also it coincide with the exponential moving average, as you can see right here, 1136. So as you know, I always sell to the buyers. I sold to this buyer at 1137, and that is my green day, $25.21. If you subtract the fees, it's going to be around $15. But hey, it's a green day. $15 in the books. It's not a break-even day and neither a red day. So guys, that was it for today. As you saw, it was a really small day, but at least it was a green day in the books. I thought about the risk. I didn't think too much about the profit, and I mitigate my risk. And also, one thing that you guys should know is that when you select the stocks that you want to trade, always try to pick one stock out of the 10 leading gappers out of the list. It's really important to pick up A quality stocks, and you get to do this by selecting one or two stocks out of the 10 leading gappers. That's how you mitigate risk, because by selecting the right stocks that has the right volume, the right flow, the right price, the right relative volume, the right percentage of change, right there you're already doing risk management. Because the likelihood for you to get a loser trade, it's way less than trading a different type of stocks. That was one thing that I just wanted to mention to bring up the importance of risk management. Trading is about risk management. It's about thinking more about the losses that you can incur than thinking about the profits that you can get. And that was it for today. Thank you so much for your time, and I hope to see you on the next video. And if you haven't subscribed, please subscribe, and also don't forget to select the bell so next time when I upload a video, YouTube notifies you. I see you in the next video.